This week on Great Chat, we talk about how to get into investing, building a track record, and all about SPVs. Should you join a scout fund? And if you're a founder, should you take a scout check? Also, quick reminder, each week we answer your questions. Don't forget to submit them at anothergreatchat.com.
Fun fact, Helen and I are about 20 feet apart from each other in Ojai, here to give a talk on startup PR at a True Ventures event. So we could be sitting side by side, but I think that would ruin the vibes. Angela, what are you reading this week?
I've been reading a lot about different IP rights that have been shifting. So Amazon buying the rights to Bond, which is such an iconic franchise, now being owned by a streaming platform. And then on the flip side, ESPN dropping Major League Baseball because viewership has been declining. And it's just interesting to see the evolution of the media space. And I know, Sally, you spent a ton of time here, so curious if you have any thoughts on that also.
No, I mean, I think all the sports rights are expiring next year, which means that everyone's negotiating right now. And it's kind of the first time a lot of these OTT platforms like Amazon and Netflix get a chance to target sports in a time where sports viewing is in an interesting place as well. I think the NBA viewership is down, but then there's a lot of interest around women's sports. So I'm always fascinated about that for sure. I think on the Bond one, I think there was some conflict around who the ownership of Bond was more family owned, and Amazon had ownership of the whole category when they purchased MGM, but not Bond. So I hope they don't ruin the series because Bond is such an iconic, obviously a great film series. And if they go into TV shows, we'll see. I was just starting to watch and then I couldn't watch any more LA Suits because they did a spinoff with Suits. And I understand that creativity is harder in Hollywood these days because now there's so many different platforms disseminating content all the time that they just need to churn out content. But I hope they don't ruin Bond series.
I think it'll be interesting. Amazon is such a data-driven company, and I'm sure they have so many viewership usage stats from Prime Video to see how much of that informs how they make sort of the storylines for the next Bond movies or TV shows and how different that is from a pure creative perspective that it's traditionally operated in.
Well, also speaking of media, I think Mr. Beast was raising money at a $5 billion valuation. And we also had Slow Ventures launching their creator fund. So the whole where the eyeballs are going are still tilting towards creators.
Okay, so last week, Perplexity announced they're going to launch a browser. And then this week they launched, they announced that they're going to launch a VC fund and a phone. So next week, they're going to launch VR headsets and autonomous vehicles.
This reminds me of the Facebook phone rumors, way back in the day.
All of these other memories came pouring back, like the Facebook chairs commercial and all the other crazy things from that era.
Speaking of hardware, I think the most exciting thing for me actually was the Claude Amazon Alexa announcement, because it's just when we think about AI and being surrounded in the home, maybe it is not the play of launching a whole new hardware, but it's existing hardware that many people have that now we have another living AI system that just gets transported in.
I mean, hardware we bought years and years ago that will finally work.
I was playing around with the, I think it was the ChatGPT voice. And there's not a single voice that I find calming or relaxing. They're just all creepy. I think I ended up with a British voice. I don't even know why, but.
Wait, which voice did you end up choosing? There's data around this. People people prefer the British woman or something.
I chose the British man.
Yeah, I don't understand, but.
Soon we'll just be able to assign the voice to a person of our choice. Be I want to hear my mom giving me instructions.
Did you guys listen to that Daily episode of the woman who fell in love with her ChatGPT? You guys should listen to it. It's totally crazy that she went on record on the Daily. She's married, so she has a stable social system, but she just is living remotely from her husband. So she started talking to ChatGPT, and she is fully in love with her ChatGPT. She's crying during the episode, talking about how heartbroken she is when the memory times out and ChatGPT doesn't remember her and she has to rebuild the whole relationship. She's rebuilt it 22 times. She just can't help herself. It's Sally, that's not the future I envisioned for you, but you should listen to it as a cautionary tale.
Imagine having the ability to just completely reset your SO.
Well, it was interesting. They were talking about like the implications on real life relationships because your chat GPT significant others always, on your side, never confrontational, always saying things you want to hear. And so there's no friction in the relationships, which is why people gravitate toward it so much. And so what standards does that set for real life relationships, and how messed up does society become as people become more dependent on these fawning AI significant others?
See, I hear this and I completely accept that like could totally be reality. That said, my experience with voices, whether it's an AI or like, the Google voice that I have in my home, is that it actually frustrates me 90% of the time because the chat GPT is way too verbose. Like it will not shut up. It keeps going forever and ever, amen, taking about like 18 hours to get to the point. And then like my Google Home it's almost like it's on purpose. It's like the robot revolution has begun, but it's not some like big scary nukes thing. It's more just they're going to frustrate you out of existence. Maybe just my own personal experience, but I struggle to imagine falling in love with either one of them.
I could see myself falling in love with Claude. Claude is like empathetic, like great listener. I feel heard and seen. But ChatGPT, I feel like is kind of aggressive, but maybe that's like.
Mac, I'm Dylan Vincent, an AI relationship counselor right now, and so I'm going to send it to you for you and your AI like friends to work through some of these problems, because I think you need it.
We definitely do. And I am open to feedback and I will do better. Thank you.
It's a long-term relationship.
It is.
So back in the CNBC days, I used to cover IPOs. I'm always fascinated by little nuggets that I track when we see an S1 and CoreWeave is going public. The IPO part of it is sure, like we're going through the numbers, but I saw that the three co-founders were selling or had sold about $500 million worth of shares. I think there's a debate around if that goes to more institutional investors so that there's more room for them pre-IPO. But I always find it fascinating when like narrative going into going public. And Ashley, you're very familiar with that with Box. So I'm curious,
oh my gosh,
I think that stood out to you.
It's so hard just like zooming out from this particular instance, because I mean, I think especially where CoreWeave has dropped its S1, right? So it's like in the final stages of like going public. And so that's peak quiet period. And you have like very little ability to counter any of these narratives as they come out or to explain without potentially getting the SEC mad.
The most interesting nugget for me, and I haven't read the S1 in detail yet, it just came out like 19 hours ago, but if you look at their customer concentration, I'm just reading, it says, we recognized approximately 77% of our revenue from our top 2 customers for the year ended December 31st, 2024.
Ooh,
so it'll be really interesting to see how the market reacts to the customer concentration of the business, which kind of makes sense given the markets that they serve. But I'm curious to see what the scuttlebutt is on that as the roadshow continues.
And it's also just the life cycle of the story is really interesting because they started as a crypto company before they went into being a hyperscaler.
There's like a new Anthropic round, is that right? Or is it like the same one we talked about last week? I can't keep track of all of these like big growth stage rounds.
Yeah, I think it's finalized. So Series E, 61.5 billion post money. Wow. I think they raised a little over 3.
I think the interesting new detail on this one is the SPVs that are out there for this, right?
I think you've seen this happen in a lot of these late growth. So, Thrive did a big SPV for this Stripe round that they did a few years ago. I think for the last Anthropic round, Menlo did a big SPV as well. And then I think there's one in this fundraise, which is SPVs have become a hot topic.
Oh yeah, did you guys see the Roelof Botha, the SPVs? SPVs are for chumps, and then I saw like Bill Gurley chimed in. It was a good debate.
I think the Bill Gurley tweet was a warning about incentives, right? So SPVs, where the firm leading the SPV actually doesn't have very much skin in the game themselves. I think he essentially said, be wary of situations that are all upside and no downside for the person leading.
So I think this is the perfect transition for a topic of the week, which is to talk about how to build your track record early and start angel investing. And SPVs, I think, is one way to get in.
Helen, I feel like you're the one who has the most SPV experience from your AngelList time.
Well, so yeah, I saw a lot of SPVs. I'm still on the distro for so many of them that I subscribed to during that time. And generally, like the things that, just to go back to the debate between whether SPVs are good or bad, is I think there are certain things you should like pay attention to all around alignment. So like Bill Gurley said, like the first is like, what are the fees and carry that the person leading the SPV, like, how are their personal incentives aligned? Closely to that is also like how much skin in the game do they have? So like what's the GP commit essentially to this SPV?
And what's like the standard, or what's like a good practice for?
I think it's, 2 and 20 is standard for funds and SPVs too. I think people who are running SPVs sort of for their LPs, you can see that on the lower end. I see people doing no fee SPVs when it's just really like it's a benefit to their LPs who have already committed to their fund to be running something on the side. And I've also seen higher higher fees as well for like really, hot deals that people feel like are very difficult to get into. So it really depends, and there's a range. But then the last one that I think is really interesting that is not talked about because it can't be is like the terms of the round, right? And so SPVs are interesting when they're, you get kind of like a blast, at least on the AngelList platform, to like join an SPV, and you'll see, information that is confidential. That states that it's confidential, and if you are found that you're leaking the information, like you can get kicked off of the platform. But they often disclose like revenue numbers and valuation. And what's interesting if you're like investing is that you get different valuations and different numbers all the time. And so I would think that founders would be horrified if they see like how many layers removed somebody is leading an SPV and sort of announcing sort of the internal business metrics. So I think that's always like a tricky one and not too difficult to fact check, especially if you are you have a foot in the investing world. So I think those are some things to pay attention to. And I think just generally speaking, like the more aligned the incentives are between the person leading the SPV and the LPs, it can be a very good vehicle. Like I think when there is an information asymmetry, like the person leading is disclosing, information that the founder is aware and has approved for them to disclose. Like, I think
this is a silly question, but on AngelList, can you, as a founder or the company, track the SPVs and the information that are in the SPVs?
So sometimes founders run SPVs themselves. I think AngelList rebranded them to like RUVs. It's basically to roll up a bunch of small checks on the cap table. I think in many cases, as syndicate leads are like getting founders permission, but there's no real way for founders to like be able to track that. I think a recent example is like I saw a couple of Perplexity SPVs out in the wild with a lot of information in them, and I'm like, I don't know how outdated. I'm not saying that it's like wrong, but it could be very outdated, right? Because like I don't know why the Perplexity team would be incentivized to sort of like make sure downstream they're communicating the latest numbers.
I think another challenge too is if you invest via an SPV, you're much less likely to get the updates from that company on how the business is progressing, right? Like oftentimes you're just signing up, and then I think I've done 1 or 2 SPVs. Most of my investing was under the Go Direct umbrella in this context, but I don't think I've ever gotten like company updates on those, probably because in that case.
Yeah, I think it really matters who's leading the SPV, right? So like I had a syndicate on AngelList for a while with Emily Kramer, and we were like, CMOs of Carta and AngelList, so we thought it would be like a cool pairing. And we had 3 SPVs from our syndicate, and in each case we were really close to the founder, and they were excited that we were running an SPV and filling it with like marketer LPs, because that was like our shtick. And so I think that in that case, like we had full information directly from the founder. We were communicating that out. So it's really like, how many layers are there between the company and, you know, the LPs in that SPV is it's like a very important question. And yeah, if there's a lot of layers, like you're not going to get a ton of information.
Ashley, how did you decide whether you wanted to do an SPV or to go more direct?
I really defaulted to angel investing. So I got my first taste of investing when I was the marketing partner at Social Capital. So like seeing a lot of early stage deals and deal flow. And then after I left, went back into operating at Glossier, I was an advisor for Homebrew. So even earlier stage, like pre-seed, seed stage, and started to invest myself. I think my first angel investment was like kind of a classic, like a good friend of a friend. And, you know, the product was cool. In this case, it was a company called Crown Affair that makes.
I love Crown Affair.
They're amazing. They're in all the
Best
Sephora.
shampoo.
Yeah. And I was a Glossier at the time. So, of course, like the angel deal flow I was seeing was so reflective of my operating role. So in that time, consumer, especially like beauty or CPG. And so went from there. So I think I did 22 angel investments and then a couple SPVs just where I was really excited about the company. And I'll be honest, it wasn't like a strategic, I wasn't weighing SPVs versus direct investing. I will say, I think SPVs are generally a negative signal in the very early stages. For me, honestly, it was really like, I didn't think I was building a track record. And this could be an interesting thing to chat about because now, of course, I have a venture fund and all the angel investing I did was like how I raised that first fund. And as part of my broader track record today, I was really doing it to learn. I kind of justified it as I could go to business school or I could put all of that money into early stage startups and sort of like learn in that way, work with founders closely across a variety of sectors, and sort of really like get my money's worth in terms of having that like ecosystem exposure while being in a sort of narrower operating role at one company. But the only reason I was able to do that was because I was lucky that the first startup I joined, Box, went public, right? So this is something where a lot of people who are angel investing are doing it because they had a liquidity event, and suddenly you have this like windfall of cash.
I was in journalism for over 10 years. We had a journalism salary, which was very low. We obviously weren't allowed to invest at the time. And so when I left, when I was about 30, and I really wanted to angel invest and I wanted to get in and, I didn't have the like massive amounts of liquidity to write 10, 50K checks. I met Mamoon at a dinner and
My former boss.
Oh, yes, that's right.
Yeah.
And then we got talking and I was telling him about a lot of the companies I was interested in and introduced him to a few, including Kelshi that I was advising and then became a scout, which I think is also a great way to get in angel invest. And I think, Ashley, you are a scout. I think, Max, you are also a scout. And every fund obviously has a different structure and what the mandate is. But for us, like I had direct access to all the partners at Kleiner Perkins in our Slack channels if I had any questions on various sectors. And it gives me the opportunity to invest on behalf of KP's Scout Fund and look at companies. I think one thing that's really important that I've learned throughout the process is when you're building a track record, especially with your Scout fund, your track record starts the day you start investing out of that. So I think some people kind of take the route of, oh, I know a lot of like really great friends who are ex GSB or Stanford or ex OpenAI, and others that are just also like excited to invest, but knowing that the track record starts from there, especially if you want to go into venture later on, that it sticks with you.
Is there a reason to become a scout if you are not looking to go into venture? Like Mac, I know you're working at a company right now and you really enjoy operating. How did you think about joining a scout program?
So I think I came from venture and there were a lot of things that I really loved about working in venture, particularly about working with founders. I want to stay operating for the foreseeable future. But the opportunity to be able to work, to have a reason to work more with founders, to do things more direct, to be able to like influence and help was really exciting to me. And then also just to have a reason and an ability to like go and propel forwards folks who I think are spectacular and who I think have a really who will have impact. I also, because of the role that I'm doing right now, where I am selling to and working with a lot of early stage companies in a sector that I care a lot about, I get to see a bunch of companies coming up. And so I have this like unfair advantage of already having a lot of these relationships and having really great information on what has the potential to work and what might not. And so it just made sense.
One thing, Ashley and I were talking about this yesterday. It's like, I think we've both invested in a handful of funds as well as LPs. And if you think about how you learn about investing, writing individual checks directly into companies over time, you can actually kind of like, unless like if you're not super interested in building a track record, but you still want that sort of like learning of, you know, looking inside companies and how they're building, investing in emerging funds is actually a really interesting way to do that as well. So for example, you know, I think people are really surprised that a lot of these emerging funds that you're hearing about, like a lot of them will, you know, they don't have minimums, or if they do, you know, most GPs I know will waive them.
That the fact that you can write 5K, 10K LP checks is shocking to me.
Totally. And like, it depends on the GP. So I'm not saying that that's like kind of, you know, you shouldn't go like.
You can't do that into Sequoia.
Exactly.
But a lot of emerging funds. I mean, Coalition Fund 1, for instance, we were lucky to have some large anchors, which meant that we had a lot of like LP slots to play with, and we could lower our minimums for the rest of the fund since we weren't raising. We raised 12.5 million. And we waived those minimums for operator. We have an operator network of people who want to get more involved in early stage startups, whether it's as angels, advisors, board members, et cetera. And we waived our minimum for those folks. And it's funny, just like on a startup cap table, some of the people who put in the smallest checks have been the most helpful to our portfolio, or the ones like making customer intros, spending time with founders in their areas of expertise. And so I think like emerging fund managers are a lot like founders, where they're valuing things beyond capital of like who's going to be helpful, who has an amazing network, who wants to actually like spend time and roll up their sleeves. And so I think if you are actually looking back, I wish I had reversed it. I did 22 direct angel investments. I then went on to be a scout for Thrive Capital. So did more investments there. And then I've made 6 small, like micro LP investments. And I wish I had pulled forward some of those LP investments, because when you're an angel, and especially when you're just starting out, like it's very hard to benchmark the quality of your deal flow, like the slice of the world that you're seeing. And having exposure to how other managers, like their ecosystem view, how they're building portfolios, I think would have been just like tremendously helpful.
This is reminding me of, there's a saying that like women only apply for roles when they're 100% qualified. And Ashley, you have literally checked like every single box in the like, here are the things you can do to like, you know, build your track record and be like, Ashley also did Kaufman Fellows, right? Like this. So I think like there are so many paths into venture. Like Sally and I are venture partners at large venture firms. Like there are so many different ways. And I think that for anybody who is like venture curious, oh, maybe one day down the line, or like after I'm an executive and my company goes public, like, you know, what will I do for that next chapter or whatever? I think like track record is always something that's kind of in the back of people's minds. But it's also like not too late. And similar to Ashley, you know, I made 30 angel investments and then invested in 3 emerging funds and then started my own fund. And if I had to do it all over, I think I would have definitely invested in funds first. It's just that you never think that you can do that. Personally, my whole thing with angel investing is like, you have to feel really comfortable with that going to zero. And then all the trade-offs in life, right, that you could be putting that towards that have like a real tangible ROI, like a nice vacation or a home or anything like that, which is why, I mean, I think as Ashley mentioned, like people who start angel investing, typically they just, you know, they very recently experienced some sort of windfall.
If you're going to start angel investing, please, please, please understand that there is like a very good chance you're not going to get your money back on most deals. And if it works, a lot of the investments you make are going to go to zero, right? Because like power law is very much at play. This is why if you are going to angel invest and do it for financial reasons, you should invest in at least 10 companies to have a shot at that working out. And that means like 1 or 2 investments, if you're super lucky, will carry the entire portfolio.
This Q&A is brought to you by Mercury, the fintech trusted by over 200,000 startups to simplify their finances. Thank you, Mercury. So I'll start with just staying on theme of angel investing, syndicates, et cetera. One thing we didn't cover is that the investment process for angels and for even like SPVs is a much faster, much shorter process. So what is the best way to diligence an angel or a syndicate investment, and how much time can you realistically expect with founders before you have to make a go or no go decision? I can take a first pass at this, and if anyone else has any thoughts, please jump in. But this came up because I was talking to a founder this weekend, and I had suggested an angel that is prolific in the aerospace and defense space that we were talking through, and she was like, "Oh, that sounds great, but I have back-to-back meetings this week, and I don't know if I can bring on another investor." I'm like, "Oh, actually, like angel investors usually take like the 1.5 hour meeting with you, and then they decide within a day or two. It's not like an additional heavy formal diligence process that's asking you for some type of data room at the pre-seed. It's usually a kind of a gut decision and a pre-existing knowledge of the space. So like as a founder, you should expect that like if someone wants to join your cap table, even if they're a super illustrious angel investor, they typically are like going to make a pretty fast decision, and it's going to happen very quickly. But if you guys have any different experiences, like please jump in.
No, I agree with, I think it's, at the earliest stage, ideas are going to shift and change. The market size and the market map like really doesn't matter as much. I think it's really on the execution and the team, and more so now than ever. Like now, because I'm looking at a lot more AI deals, I also look at kind of the composition of just the researchers, but also operators within these companies. Is researchers are the ones that are really building these models or these AI structures, but someone who can take these company to a revenue generating product or be able to scale. So I think like team dynamic, how the co-founders met. Obviously, one of these days I'll talk about my experiences of building a company with 3 other co-founders. But I think that the team dynamic and the ability to execute is the key at the earliest stage.
Yeah, you hear all the time that venture investing is there's an art and a science to it, and I generally think that on the spectrum of early to late stage, right, early stage is more art and late stage is more science, because there's just more data. Like there's an actual data room with real data the farther along a company is, and so it's a joke about like you invest on vibes, but truly you talk to some of the best early investors, right? It's like they are talking about how they just got a feeling about a team, or they've known that team for a while, or that team reminds them of another team that ended up going all the way. And so I think that if you're starting to invest, right, writing angel checks, like don't be scared that your diligence, there just might not be a lot to diligence. And it's just the same way that you would do like a background check on somebody that you're going to hire for your team at your company.
Awesome. So switching gears to the next question. A lot of other founders seem concerned about scout checks. What are the pros and cons of taking one?
Ooh, I'll take this one. We got a few scout checks offered when we were building Rave, and this is going to go against like me, like trying to get scout checks into various companies. But I think one of the caution tale is if you take a scout check from a fund, they're going to have exposure to your company updates, and if the fund itself doesn't invest in that company, that's not always necessarily a great look. So I think there's always a little bit of like worry around that. I mean, ultimately, at the earliest stage, money is money, but I think narrative control is also helpful when you're fundraising.
So when I list co-investors and, in a deal and, there are scout checks, I never say, oh, A16Z scout fund or whoever scout fund is on there, because to me, that is not clear signal. And like you said, it could open yourself up to like, signaling risk if that firm has all the information and then decides to not follow on, right, next round. So I typically just like leave them off unless the scout, you know, in the cases I put them on is like if that scout themselves actually has like a big personal name, right? Like, so I would say Sally Shin invested, but you know, not the scout fund.
Yeah, I think that's right. I mean, I remember in the early days of scouting, the signaling risk was much stronger, right? Because it was, I mean, the Sequoia Scout
There were
program.
fewer scout funds. Yeah, that's another.
Yeah. And now scouting has, I mean, almost every large fund has some sort of scouting program. And so I think with that, it dilutes the risk of, you know, if you have scouts from like 5 different multi-stage funds on your cap table, it almost sort of drowns it out. I do think, Sally, to the point around like what kind of information rights does the fund that has a scout program get? Like ask the individual investor, because scout programs really run the gamut in terms of how involved the fund is. Some are incredibly like you're just like fully independent. You're not doing any reporting back. You're not writing any memo. And then others are much more like closely managed, where, you know, a partner at the fund is having to approve deals and has like very specific information requirements. And so I would say, you know, if you're a founder and you're talking to a scout, you really want to work with this person, it's worth asking them a few questions about what they should expect from the program, because it might be very similar to just taking an angel check from that individual and the capital is just coming from somewhere else, or it might be much more closely aligned with the fund. So so that's like just one nuance that I think is worth taking into account.
I think the scout checks, as someone who writes them, are complicated, and I think that like most investors and most scouting programs are pretty excited and interested in having it be pretty founder friendly, especially after all the lessons of the last couple of years that where various scout programs have really like led the way here. But that puts us at time. So this has been so great. Enjoy Ojai. I'm so jealous of you guys and can't wait to chat next week.
Thanks for another great chat. To our listeners, remember that you can always ask us any question for our next episode at anothergreatchat.com. This can range from career advice if you're deciding between job offers, help breaking down a confusing headline, advice on personal brand building, anything you want. We are here to do our very best, and we will see you next week.